So today I'd like to welcome Tim Norris from National Real Estate Insurance Group on the call. And we're going to introduce Tim in just a second here. Before we get started, I'd like to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Okay, so Tim, hey, welcome to the show.
Hey, good to be with you, Mike.
How are you today?
Merry Christmas, Happy Holidays.
Yeah. So where are you at right now?
I'm in Kansas City, Missouri, about a mile or so south of the International Airport.
Okay. Well, for those of you that don't know, Tim Norris is in the insurance business, and we'll let him talk about himself a bit. But one of the biggest challenges I've faced, or a bigger challenge, is really understanding what you have in terms of insurance as a real estate investor. And when we started working with Tim and his company, it really helped us understand where we had some weak links and where we probably were overinsured in a lot of areas. And that's the importance of working with somebody that you know. So Tim, will you take a minute and introduce yourself? Let us learn a little bit about you.
Sure, happy to, Mike. Appreciate the time today. Yeah, my name is Tim Norris. We have a company called the National Real Estate Insurance Group, and as I indicated, we're based here in Kansas City. We have about 25 people on staff, and frankly, our company was designed and built around the unique needs of the real estate investor. I figured out really a long time ago, back in the early 90s, when I attended my first RIA meeting, all kidding aside, dressed in a shirt and tie because I heard the word investor, and I thought, well, I better dress up a little bit, right? And as I come to find out very quickly, it was more like flip-flops and cargo shorts was the dress code for those RIA meetings. But the long story, very, very short, one of the first folks with whom I met there was the president of Cincinnati RIA. That's where we were located at the time. And she was basically kind of pushing me to buy a table at one of the vendor shows. And I asked, well, gosh, I'm looking around the room, I can't believe no other agents involved. That was back in the day, as they say, and you probably remember those days, Mike, that there was 400 or 500 people at a RIA meeting in the mid-90s. And I thought to myself, well, holy cow, got all these people with, call it what it is, expendable income. They're investing in non-owner occupied property. You would think there'd be 30 insurance agents involved there. People have nicer cars, you would think, and homes and boats and those types of nice little amenities. Come to find out, though, that the one agent that had been involved there was taking people's premiums and not binding coverage. So very quickly they figured out in that group that there wasn't much of a trust factor. Well, I told the president at the time, I said, well, I can guarantee you that much. That won't happen with us. Well, went ahead and took her bait and had the vendor table at the show. And there was literally, I don't know, 400 or 500 people there in that vendor show that night. Again, it's probably been 15 years ago. And thank goodness I told one of my staff people, I said, I'll tell you what, Jill, you come with me and I'll give you a day off. You just spend 3 hours manning this table. I don't know, there might be 10 people there might be 1,000 people there. Well, there were literally people lined up to talk to us because they had questions about insurance as it relates to real estate investing. From the fix and flip type model all the way to the rental or the landlord type model. And I started scratching my head thinking, wow, every now and then you kind of fall into something that's pretty smart. And I just made the decision then that most agents in the insurance business, the property and casualty business, they were in one end of that spectrum or the other. They only wanted to deal with personal lines insurance, the home, the car, the life, those types of things, or they wanted to deal with what I would call the easy commercial, the retail, the office space, the warehouse, the larger apartment buildings. There's nobody really addressing that, again, unique need for residential real estate investors where they'd have to deal with multiple ownership entities. You might buy properties in your IRA, you might buy them in an LLC. They were dealing with multiple phases of occupancy. And as I grew in my business as a real estate investor, figured out a lot of folks were investing in other states. Well, nobody was really addressing that from a local basis, let alone from a national basis. And that really evolved into what we call now the National Real Estate Insurance Group. Back in the 2010, I had merged with a company called Affinity Group Management, I think of which you're aware and know. And they had a program that was very focused on the flip model. It was called renovators insurance. So, again, 4 or 5 years ago, when flipping was kind of the flavor of the year as it relates to the types of modeling you would do in the real estate investing world, that's what they did. They focused on that sliver, if you will, of that market demographic. Mostly what those folks did was flip. Well, I was on the other end. I wanted the folks like you who had multiple rental properties. It was more residual in nature. It was more of a static business model. Well, it was a great merger because between those two entities, we've grown considerably to the tune now we insure 4,400 investors across the country, approximately 32,000 locations on a monthly basis, predominantly still in that 1 to 4 family arena with mostly single family investment properties. So we built that model around those, again, I've said it probably 4 times now, around those unique needs of real estate investors. And we can talk about some of that stuff as we go on if you'd like to.
Yeah. One of the things that's been interesting for me is, I've always thought this about insurance, in that you don't know what you have until you need it.
Sure.
And, from car warranties to other things, it's like you never really know what you have. Health insurance, on and on. And, we were unfortunate to have a claim. We had a fire at a rental property that was a total loss a couple of years ago. And that's what really opened our eyes. Up to that point, it was like, well, we probably, I don't know exactly what we have, but this is what they told us, so we should be okay. And in fact, we were okay. We had enough coverage to get out of the situation, and we actually rebuilt the house. And part of that is because as a real estate investor, I was able to get the work done quite a bit less than if I had to source it out. But we didn't, for all the burden and all the things we had to deal with, it certainly wasn't, we probably, I say made a little money, but it wasn't,
sure.
It certainly wasn't worth, 6 months lost rent and having to deal with all those things. And it's one of those things that we even at the time we were putting in the claim, we really didn't even know what we had. We didn't know what we were going to get back. And, we kind of always erred on the side of being a little bit overinsured, but that was to protect ourselves from what we didn't know. And, now that we know what we have and what we need a little bit more, and a big part of that's been working with you guys to help explain it and to understand that we can have different types of insurance on different types of properties based on what we would do in the event there was a total loss on that specific property instead of our whole portfolio. So it's really been great. Yeah.
Agreed. Yeah, and I think too, a couple things, and they may sound a little Pollyannish, if you will, but one is that in my mind, our job as an advisor, so to speak, is to educate to not so much to a level of expertise, but to a level of cognizance, so you can make smart decisions about the premium dollars that you spend. Whether you spend them with us or not really is neither here nor there. The point is, understand it enough to make the right decision, because frankly, 2 hours after we have a conversation with somebody, that person's likely going to forget 90% of what we talked about, because it's insurance. I mean, for God's sake, it's the one thing we pay for we never really want to use, as to which you alluded. So it's kind of like your prepaid funeral home benefit, but I guarantee you're going to use that one eventually.
Yeah.
But, the second point I wanted to make is that, the best type of insurance is really self-insurance. And that sounds somewhat contradictory or counterintuitive, but the more you can self-insure, the better. Because at the end of the day, these insurance companies are in the business to do what? Make money. Right. So if they can make money by averting themselves from the risk, that makes sense. Not so much out to take, call it what it is, that which you and I would know is maybe indemnification, but take that ability to be indemnified away, but really not to overcompensate folks for a claim. And really, you touched on it just briefly there. You got, quote unquote, a little bit more than maybe you needed. Right. Well, at least with our program, and not by any stretch to sound like a pitch here, but with our program, the attitude is we want our investors, the clients, the participants in our program to be indemnified when they need it. At the end of the day, the more powerful thing that we think we have is so much more than anything is stability in the cost. We haven't taken across-the-board cost increase. What I mean by across the board for all our investor participants in about 8 years. So I don't know about you, but if you had 50 locations and you're with Podunk Mutual, just pick a company. And even though you didn't have a claim the prior year, but where they're located predominantly in a geographic region, let's say they didn't have very good results. Well, you're stuck with all the other clients with Podunk Mutual, maybe paying a 20, 30, 40% rate increase. Right. And over 50 homes, that could put a pretty big dent in your cash flow. So our attitude is if we can stabilize the costs because we're controlling the market relative to our participants and keeping the insurance companies profitable, yet still providing appropriate protection, that's the goal. A little bit different spin on it, but that's really the goal.
Yeah. So Tim, what do you think with real estate investors? You know, there's people that are watching our show here that have one property or they aspire to have some. Do you guys focus on the individual investor with, you know, one to a handful of properties? Or I know you prefer to obviously build relationships that work with people with larger portfolios.
Sure.
But in terms of a resource, what level of investor do you guys serve?
It's going to sound flippant, so to speak, but across the gamut, 80% of our portfolio is filled by clients with 1 to 2 investment properties. So we'll handle the onesie twosies, so to speak, and then in the larger portfolios. Of course, I like dealing with the larger portfolios because there's some complexity to it, maybe some creativity when it comes to how we build that insurance around the business model for the specific investor. It's the wonderful thing about what we do is by no stretch is it cookie cutter. We're able to accommodate the large-scale investor all the way down to the newbie, so to speak, that really needs the help, especially on the front end, and we're happy to do that.
Yeah. So what do you think with new investors? I know they tend to, you know, they have a friend that's a State Farm agent or, you know, some other brand, and they go set up an annual policy with those folks. I mean, what do you think the biggest thing that real estate investors are, I don't want to say doing wrong, but kind of the opportunity they're missing out on? Or do you think they're misinsured or underinsured or overinsured more often than not? Or
yeah, I think when it comes to the true rental property where the investor is a landlord, it's kind of tough. I hate to say this, but it's really kind of tough. It's like boiling water. It's tough to mess up because State Farm, Allstate, you know, those are really, really good, solid companies. I think where you run into issues, especially as a new investor, is when you're speaking or working with an agent that may not have the experience as a real estate investor. Not so much from the terminology perspective, but the actual hands-on experience of dealing with investment properties. It's in that vacant and rehab phase. That's where we see a lot of misinformation. I'll give you a quick example. I remember, I forget the name of the website, but it was one of those Bigger Pockets type sites years and years ago. I remember being a moderator on there on the legal and insurance forum, so to speak. And you get a lot of misinformation that's promulgated, especially from agents that may just not have the capability or not have the markets to appropriately accommodate that rehab or that flip investor. And I literally saw on there somebody had posted, well, go ahead and just put some furniture and some lights in there and we'll just count it as occupied. Well, I don't know about you, but in many states that's fraud and that's a felony, and there's another F word that we could use that we won't, that you could really be, you know what, if you actually do the wrong thing. The point is there's insurance for every phase of occupancy for anything. You can buy insurance for about anything if you're willing to pay a premium for it. So not so much making a mistake, but just don't try to oversimplify it, because there is a difference, not just in cost, but in coverage need when you're dealing with vacant and rehab as opposed to a rental property. And don't, even for that short period of time that it may be under rehab or it may be vacant, don't try to skirt that issue by putting the proverbial, you know, round peg in the square hole or square peg in the round hole, whatever it is. Do it the right way.
Yeah. I actually know of someone that had his property insured, had a tenant in there, and the tenant had stopped paying rent basically and had moved out. He didn't even know they had moved out. Sure. And then somebody broke in and stole copper out of the house. So the whole house flooded. So there was mold everywhere. It was a big deal. And he really had to go round and round with his insurance company because they were trying to say that it was a vacant house and you didn't make us aware of it. And They were trying to not pay that claim. They ended up paying it. I don't know all the details. But it was a big issue for him. And the fact is it was vacant, but he didn't even know it was vacant. He knew it was a non-performing property. And just the fact that you have to call your insurance company for every house and say, okay, it's vacant now. Okay, now it's not. That's just nuts when you're a professional real estate investor of any level, really.
Well, that's why our program, again, not to pitch here, but our program with the reporting form that it utilizes every month, you're simply reporting to us any changes to the prior month's inventory relative to occupancy, relative to coverage amounts, adding locations, deleting locations. We've had clients with hundreds and hundreds of properties have gone from a part-time administrative person just dealing with the insurance across their portfolio to literally 20 to 30 minutes a month just making the changes appropriate to whatever's changed in their business.
Right.
An easier way to do it.
So where do you see things going in the insurance industry as it relates to real estate investors over the next, let's say, 5 to 10 years? Is it going to kind of stay status quo? Is technology making a difference in real estate insurance? Or what's happening?
Yeah, opinion more than anything. The insurance that we offer in my industry relative to these investment properties is no different, frankly, than it was 80 years ago. This is dwelling and liability insurance. You can't reinvent the wheel. I think the methodology may change relative to giving people, especially real estate investors, the more professional real estate investors, if you will, a little more ease of use, a little more capability. We've invested literally $350,000 over the last year to year and a half into the technology side of what we do to give people, like you and especially the larger scale investors, the ability to really manage their portfolios relative to the insurance 24/7 type thing. Not that you do anything different than sending an email in and making a change, but to be able to do it yourself, print and or copy evidences of insurance for private lenders or for traditional lenders, those types of things. That's what the people have been asking for, and that's what we've got to accommodate. So it's a little more, call it what it is, the not so much the entitlement mentality, but the I got to have it now mentality, and that's what I think is going to be more and more capable as technology continues to progress.
Okay, great. And you guys serve real estate investors in all 50 states, or are you? Yeah,
all over the country. About a year ago, I think we picked up a location in North Dakota or something like that to make it all 50 states. So
all right.
I think with the oil fracking and all that going on in some of those areas, I think that's going to be a little bit more. We've added a lot more locations up there, believe it or not.
Yeah, okay. And how do you get to, how are you guys creating awareness with real estate investors that you exist? Because, in my instance, it was, finding you through word of mouth, just through mutual friends or business relationships and things like that. Do you guys, and I've seen some advertising as well, but how do you, just like all of real estate investing, it's an extremely fragmented business. So from a business standpoint and kind of an entrepreneurial standpoint, how are you guys finding more customers, and what's kind of going on in the competition for finding new people to work with in your space?
Yeah, we like any other business that's growing, you're always trying to crunch the numbers and see where leads are coming from, where you're picking up business. And still about 70% of our new business comes from word of mouth, comes from referral, which I think that's the best business anyway. Yeah. And that's not only, I think, a testament to the type of work that we do and helping folks and all that, but it just tells us that, hey, maybe we're still doing the right thing. But that's stated between different events. I know that I've seen you at many, many times, even not just as clients, as friends, but just we've been there together, events. We don't do a ton of SEO because, again, I think predominantly that word of mouth, that referral is really what we want to target. I think showing up at events, I speak to many, many groups across the country on those insurance issues, not in a pitchy type way, but in an educational type way. I'll do that probably 10, 15 times a year. Just between all those things and just the momentum I think that we've created, just being in the space. Even though you said it's a small space, but it's a small space filled with maybe what, 1.5 million, 2 million real estate investors. So yeah. It's big but small at the same time, if that makes a lot of sense.
Okay. And how have I guess big increases and decreases in prices in some states? It hasn't really happened. Some throughout the Midwest and Texas has been pretty stable, but on the coast where values have moved around quite a bit, what do you guys do to make sure your customers are protected for large increases in value? I guess more than anything, where the values are kind of increasing and therefore their insurance levels need to be increasing as well.
Yeah, we do it a little bit differently relative to the valuation. We're typically use State Farm, and we can just pick on them for a minute or two. You go to the carriers like that and you buy a house, and let's just use maybe some Kansas City or Midwest numbers. You buy a house for $50,000, you put 10 in it, and you either market it for $100 or you rent it out for $900. And let's just say it's a 1,200 square foot single family ranch. Traditionally, you go to those box carriers, if you will, and they're going to utilize a reconstruction cost methodology. Many of them, there are a few out there, but most of them are using what's called M&SB, Marshall and Swift Beck. They're going to come back to you with a cost to reconstruct that likely could be 60, 70, maybe 100% higher than what you paid for the property and what the property is even worth on the open market. Well, the challenge to that is, at the end of the day, if you use that insurance, the limit that they're going to engage with you on is only available if you actually rebuild the home. If you can rebuild the home for less than that limit, then that's really all you're going to get, quote unquote. We do it a little bit differently. What they've done, though, before I go too much further, is they're doing that to do two things. One, you're going to get a little higher cost, of course, because it's a higher limit.
Right.
Two, they're trying to avoid what's called a co-insurance requirement. Most policies have what's called a co-insurance requirement that basically dictates, in a nutshell, that if you're underinsured at the time of the loss, that is, you haven't paid enough premium for what's really at risk, again, I'm oversimplifying this, then they can potentially penalize you in a loss.
Yeah.
So to avoid that, because that co-insurance issue is never a positive thing for anyone involved in the equation, it's really only a negative thing, they simply, I think, have overinsured these properties. Well, in our program, we do it a little bit differently, maybe a 90 or 180 degree spin, and that is, if you want the replacement cost coverage, you simply need to insure the property to at least $65 a square foot. And before you go thinking, or somebody on the call may be thinking, well, gosh, $65 a square foot, I couldn't rebuild it for that. That $65 a square foot is nothing or no warranty against being able to rebuild it. It is simply a benchmark to garner that which is known as replacement cost insurance. Replacement cost insurance simply gives you the ability to recoup depreciation that's initially levied against a claim settlement. That's it. If a client or a prospect were to say to us, hey, this is a beautiful duplex in a B-plus area, it's 2,700 square feet, it is a cash cow. I've got a waiting list of tenants and it will always churn that cash. We would say forget the 65 a square foot, carry enough coverage to be able to rebuild it.
Right.
More often than not, though, that's not the case. People would go take that proceeds from a large loss, raise the property, sell the lot, and move on and buy another one. Right. So with that in mind, that's where the 65 a square foot, which again garners the replacement cost coverage in our program and avoids the co-insurance issue. So that's where the big deal is, I think, is most carriers are over-insure them because of that co-insurance issue more often than not.
Yeah.
And there's a quick... Go ahead, I'm sorry. No, you go.
Yeah, one of the things that I thought was really helpful when we kind of sat down to think about covering all of our rental properties was, I mean, in hindsight it seems obvious, but that we didn't have to have the same type of insurance and the same level of insurance for every property we have. Sure. I guess I kind of thought of it more of a portfolio level. Here's what I want to keep this simple. But the reality is, and this isn't the same for every investor, it depends on what part of the country you're in, what your kind of dollar per square foot that you're in that house for. But there clearly are some houses, like you said, that we have that on this one that I mentioned, we had a total loss, and it made sense for us to rebuild that house versus sell the land for nothing, because sure. It just made sense. But I clearly have some houses that were in them for, you know, the ARV, the market value, if you will, is way under the build cost. And if we would have a total loss, we would literally just take the money and clear the lot and find a way to, you know, sell the lot, or possibly even just give it to the city, you know, to avoid taxes.
Sure. Yeah, exactly.
But every house has a different kind of business case, if you will, for how it should be insured.
Yeah, and you don't want, like you just alluded to, I don't think you want to overcomplicate your business model, especially if you're a larger portfolioed investor. But at the same time, you know, those little nickels and dimes start to add up, of course. And if you keep a good eye on it periodically, if it's once a quarter, again, frankly, once a month, if you've got a methodology that you apply to each location, hey, is it this? Would we rebuild it? Then yes, we need to insure potentially to this. Right. It doesn't take that long to do that, even on a monthly basis for 100 properties.
Right.
So if you take the time and educate a little bit, and we're happy to do that, whether someone's our client or not, educate yourself a little bit about what it is you're paying for. Right. And then we always joke, hope you never need it, right?
Yep. Yep. Great. Well, what else do you see going on in the investment space? I know over the past year, you know, investing has become cool again.
Yeah.
And I assume that's feeding your business. I think there seem to be a lot of folks, at least in the markets that I operate in, that a lot of kind of out-of-state investors buying, really in some instances overpaying for houses, but it's because they're keeping them as rentals and, you know, able to get great financing, which I assume a lot of that's kind of fueling your business as well.
Sure. Yeah, we're growing profitably, which is a good thing for not only us, of course, but for our investor participants in our program. But I think what we are seeing over here is more shifting, not so much in the insurance side of things and the investment side of things, but really in the educational space. I think with what you're doing is you're getting a lot more real world advice out there that's available. It's, you know, the back of the room selling that you and I have seen for many, many years, I think is really falling by the wayside. Not to say that that's bad information, but that methodology with not so much the advent of the internet, but the access to information all over the place.
Right.
I think if you can find a good spot or spots for that matter, to aggregate and get information when you need it. It's like anything else. I think Mark Twain said it. He never let schooling get in the way of his education, right?
Yeah.
So I think that's what we're seeing a lot more of, is people have access to education. If you're willing to put the work in, it's like anything else. Well, they say the average overnight success is about 20, 25 years.
Yeah.
If you're willing to put the work in, the information's there.
Yeah.
You just got to go find it. And I think that's what we're seeing a bigger shift in, is that education space more than anything.
Yeah, I think I don't know how to measure this or how to validate this, but it just feels to me like there is, not to take anything away from the traditional real estate investor, but it just seems like there's a more kind of educated group coming into real estate investing. And again, not to take anything away from anybody, I feel like there's this, there's a lot going on in the macro environment. People that are just basically tired of working for the man, and that they can't count on their company anymore. Even a company they've been at for a long time there's no such thing as a blue chip company anymore. Nobody's jobs are safe. And I think there's this general trend towards people wanting to just take their responsibility for their job and their family and their financial situation into their own hands, more than what I felt like in a long time, I guess.
Yeah, and I would agree with that. And it's beyond the world of real estate investing. I mean, you think about the 30 years in the gold watch. That's never going to happen again. I just can't see it. And again, maybe we're getting a little, not so much political, but a little philosophical here. And I know you and my kids are in that same kind of age range, so to speak. So I tell them, you got three things: never stop learning, always be willing to change, and provide value and service to others. And if you commit yourself to those three things, you'll never want for anything. You'll always be able to provide for yourself and your family.
Right.
Whether that's in real estate investing, whether it's whatever you do. I mean, think of the trades. I mean, gosh, go back to welding school. I mean, all kidding aside, go find a welder right now. Those guys set their own hours. They make $100, $120 an hour, and nobody does that stuff. Everybody's focused on, my wife and I were off on a tangent a little bit. My wife and I joked in the mid-'80s when we were in college, mid to late '80s. Think about some of the majors that existed then. Fashion merchandising, wow, there's a real good career move right there, all kidding aside. So, I think there's a shift in that, and I'm hoping. I think there's an awakening, maybe is a good word, where people want to self-suffice, they want to do their own things, and they want to control their own destiny. So I think with what you're doing, and I think what we're willing to accommodate relative to the insurance, and that little piece of what you're doing, I think there's some good things happening. It's just hopefully we can hang on and, you hate to say it, but turn this ship around that the country is, and hopefully everything will work itself out.
It's interesting times for sure.
Yeah, that is for sure.
Well, great, Tim. Any other words of wisdom you want to share on kind of real estate? Not so much, pitching yourself. We'll add links to your company and how to learn more, maybe how to even get quotes on houses below the video. But any kind of high-level words of wisdom just on making sure you're insured properly with real estate investing?
I think the one thing that I would say is, it's not so much a words of wisdom, but something to think about, is that there are certain times, especially, call it what it is, in the phase of a property, from a vacant to a rehab, that you need to make sure that you alluded to it with the friend or person that you knew that didn't even know somebody was, the property had gone vacant.
Right.
It's like my old man used to tell me, pay attention. You got to pay attention, especially when something's going on, whether it's a drive-by, whether it's a check-in, those types of things. What's going on in that property? What's going on with your tenant if it's a tenanted property? But the one phase that we see from the insurance perspective that's probably the property's most at risk is not so much when the storms blow through, believe it or not, it's that eviction.
Yeah.
If you can pay attention to the eviction, whether it's a cash for keys program, whether it's something to lightly, if you will, get that guy out of there, or that family out of there. It's not a good thing by any stretch, but if you can keep it from becoming a worse thing by paying attention to that property in that call it what is that transitional phase.
That's interesting that you say that. I didn't tell you this, but the house that I had that burned down, that was a total loss, the tenant was being evicted that day.
Yeah.
So they said it was an accident, okay, but that is just a little too much of a coincidence.
See, I know. Not to interrupt, but we've done the research, and I forget the source, but 60% of property claims are caused by a negligent tenant.
Yeah.
60%. So if you do the math, and then maybe this is another little addendum to the words of wisdom, if you don't encourage and or require your tenants to carry renter's insurance, you should. Because forget the obvious reason that you should do that is that their stuff isn't covered by your insurance. The not so obvious reason is the liability insurance that's part of a renter's policy actually protects you as the property owner.
Okay.
They leave the candle burning, they leave the stove on, they leave the cigarette falls on the couch while they're watching TV at night and causes damage to your property. You're lucky enough to get the rent out of them every month, right?
Yeah.
So if they don't have any renter's insurance, you still may have a liability suit against them, but boy, that drawer full of default judgments does you very little good.
Right.
If they've got renter's insurance, now you've got a deeper set of pockets to go to. We've had situations where our clients have engaged in that, actually gone to the renter's insurance. The renter's insurance has actually paid the property damage because the negligence was clear-cut, obvious, and admitted, and our client didn't even have to engage their property insurance. So that's the one little maybe point to ponder is, even though most investors think about it, yeah, I should probably do that, and they never engage in it. But if you're a numbers cruncher, if 60% of those claims are caused by the negligent tenant, maybe you should carry a higher deductible.
Yeah.
Knowing that 60% of the time you can go back to that renter's insurance to get the property damage covered and still enjoy, if you want to use the word enjoy and insurance in the same sentence, still enjoy maybe the benefit of a lower cost by carrying a higher deductible.
Right, right. Well, hey, Tim, thanks so much for your information. I know you've got a lot more information to share and knowledge, and a big part of the shift I've made in my business over the past few years is really to align myself with smart people and people that I trust and value their opinion, because, there's so many things that you don't know unless you're aligned with somebody that can just tell you little nuggets, like say, have you thought about doing this? Or, I won't share them here, but you've said some things to me recently that really kind of opened up our eyes. And in fact, I will say it here, it was really kind of thinking of our business and everything, of protecting the assets of my family, more so than just the actual properties. When we talked about some of the things that you and I recently talked about that we're doing in our rental portfolio. And I hadn't really thought about really kind of insurance as part of estate planning, if you will, and wealth planning. And in fact, it just took a second for that to sink in and realize that, wow, that is a big part of what we need to be thinking about, is how to protect everything that we've built up, not just an individual house. And so I think without surrounding yourself with smart people like you on the insurance side, and a lot of other people in other kind of adjacent to real estate investor areas, it certainly makes your life a lot better if you've got smart people around you.
Sure, that's the Henry Ford mindset, isn't it?
Yeah.
Put a bunch of smart people around you. That's the way to do it. I agree.
Well, Tim, thanks so much for your time today. I really appreciate you joining us on the show.
Yeah, happy to do it, man. Merry Christmas again.
Thank you. And again, we'll add some links for people to get to you below the video here, and we look forward to seeing you again soon.
Sounds good. Thanks, Mike.
Take care. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to FlipNerd.com.